Hello, thank you very much, Ludwig, for that very nice introduction. No pressure on me now to perform. So I'm the Emerging Europe Equity Strategist from Berenberg. Berenberg is the second oldest private bank in the world, and since around 1.5 years we are looking into the Emerging Europe region. We hired a team of 5 dedicated research analysts, and we are trying to cover Central Eastern Europe, Greece, Turkey, Russia, and give investors, in particular US and European investors, more of insight what is happening in the region. And I'm talking a lot also to those investors, and I particularly like to talk about Romania, because for now 2-3 years it has been one of my key overweight recommendations compared to other countries where I'm more pessimistic. And I want to show you now why I'm optimistic about Romania's future. So firstly, what I'm quite impressed with Romania is the growth. Like since 2000, on average, Romania grew 3 times as fast as Western Europe. Western Europe grew around 1.2% per year. Romania grew around 3.5% per year. And this is likely to continue. I believe there's going to be 4.5% growth over the next 2-3 years in Romania easily, versus around 1.5% in Western Europe. So Romania is really catching up with Western Europe. Now, what are the reasons why Romania has so much potential and is doing well? So one of the reasons you see on this page, Romania has a pretty good education level. So if you look at the numbers of people who manage to leave A levels, it's around the European average. But then if you look at the wages are much cheaper compared to Western European levels. It's around 1/5. So on average it's €5 for an hour for a Romanian versus 25 for Western European. But it has improved. If we look back like 10 years ago, like the difference between Western Europe and Romania was like 10 times. Now it's only 5 times. And also what investors really like about Romania is the high educated IT workforce. There are over 100,000 highly educated IT workers in Romania. So per capita, it is the highest amount of IT workers in Western Europe. And there are a lot of the big companies like Microsoft, Oracle, which are investing heavily in Romania to take advantage of that. Now, what has been happening over the last years, and particularly after the global financial crisis, there has been a lot of reforms done in Romania. A lot of red tape has been cut, and this has been recognized by international indices which are comparing the competitiveness of different countries. So I'm presenting here on the left-hand side, for example, the Ease of Doing Business Index, and there Romania has improved from the 62 position to 36 out of 190 companies over the last 10 years. And this improvement has been pretty impressive. In particular, they like, for example, that it's very easy in Romania to obtain credit. Obviously, trade is really good because you're in the single market, and also enforcing contracts is doing well. While there's still some room for improvement, for example, in receiving construction permits or also obtain electricity. But what investors also really like, I'm sorry, on the right-hand side, something went wrong with the names, is that Romania has very low corporate tax rate. It's 16%. And if you compare it to other European nations, that's very attractive. I mean, Hungary has now overtaken Romania recently with cutting corporate income tax from 19% to 9%, but still Romania is the 3rd best in Europe. Now, if we talk about kind of the long-term topic, the long-term growth potential, and looking at the wood, not the trees, what is happening already over the last 10-15 years is that Romania is converging slowly to Western European averages. So, for example, if we look at GDP per capita, like in 2000, it was only around 16% of EU average. Now it's already 26-27% of the EU average. And if we look at where Poland and Hungary are standing at the moment, they're around 40% of Western European average. Romania could get there in 10 years from now. And then if we move further, another 40, 50 years, then Romania should be there where Western Europe is now. Obviously, Western Europe is also growing, so it's still a catch-up game. But the trend is there. And if you look at other countries which are struggling a bit, which are outside the Eurozone, like Ukraine, for example, there you really see how much Romania is also profiting from being close to Western Europe and being supported by Europe. Now, if we look at some of the criteria where Romania stands compared to Western European or other Eastern European countries, you see they are still upside. For example, the number of cars per 1,000 inhabitants in Romania is around 250. It's up from below 200 8 years ago, but it's still far below, for example, Czech or Polish levels. If we look, for example, at the number of flights, there has been a lot of growth in Romania. I mean, the number of flights that have been taken per capita in Romania has been growing by 175% over the last 10 years, much more than, for example, Hungary, Germany, or Czech Republic growth. But if you look at the overall numbers, there's still more room for growth. For example, in Czech Republic, people take around double as many flights as in Romania. And those charts I could do also for number of motorways, number of rail tracks, and so on. Everywhere you see the same picture. Romania is catching up, but there's still a lot more catch up to do, which offers obviously growth potential for investors. Now, what is behind it? What helped a lot is obviously EU cohesion funds were a big driver of growth in infrastructure over the last 3, 4, 5 years, and it's set to be also for the next 5, 6 years. So there's another 30 billion euros coming from Western Europe to be invested in Romania. That's around 3.5% of GDP per year, free money, more or less free money from the EU. And this is also leading to more foreign direct investments coming into the country. Like over the last 25 years, more than $80 billion were invested by foreigners in Romania. And this has also led then to strong export growth. If you look at export growth over the last 10, 12 years, on average it has grown over 11% per year. This is really impressive figures. Obviously, investors would love to have exposure to exporters via the Bucharest Stock Exchange, so we would really highly appreciate if more companies which are exposed to that sector would come to the stock exchange. The same counts for exposure to the consumer. I mean, when I talk to international investors and I show them the numbers, they're like, wow. Like in summer last year, when I compared Romanian retail sales figures compared to any other country in the world, I couldn't find any which showed stronger growth in Romania. Romanian retail sales was growing over 15% per year. Not China, no India, nowhere came even close to that. And that's something really impressive where investors wake up and say, well, I want to get exposure to that. So any company on the Bucharest Stock Exchange who might think about doing an IPO, highly recommended to do it because there will be a lot of interest by investors. And how is it supported? Obviously also by the wage growth. I mean, wage growth, the latest figure I saw was 13% year-over-year wage growth. I don't know any other country which is showing such rapid growth in wages currently. Obviously, what also helped was the cut in taxes and VAT, because this also leads to a whitening of the economy. So more people say, okay, I'm going to pay taxes and I'm going to announce more official figures, because obviously now VAT is much lower than before. And also this helped to keep inflation in check. In a lot of countries where you see similar growth, you would see a massive uptick in inflation, but you didn't see it in Romania. There was even deflation, but that obviously then also helps the Romanian central bank to keep the monetary policy accommodative and not be forced to hike interest rates. Now also, what we've seen previously, what wasn't that great, what is now much better is budget deficit and current account deficit, also called the twin deficit. During the growth or previous big growth cycle, 2005, 6, 7, 8, we had a huge current account deficit, double digit, and also a huge budget deficit, which is both long-term, not sustainable. But thanks to the reforms and what Romania did over the last years, they have sorted this out, and now budget deficit is much lower than previously. For example, 2009 we had 8-9% budget deficit. Now we're around 2.5% budget deficit. Also, if you look at the current account deficit, like in 2015, it was nearly balanced, while it was 12-13% in 2008-9. And also for this year, I mean, the current account deficit will be slightly higher. 2016, around 2.5%. But as long as both numbers stay below 3%, it's fine. And thanks to all this positive improvement, you can also see that in the CDS ranking, which kind of shows what investors have to pay to insure themselves for potential default of Romania, that Romania has improved there very much, and it's now in the club of below 100 basis point CDS levels, which is quite a big achievement. And if you look, I compare here on this chart the S&P credit rating with CDS levels. And there you can clearly see that Romania deserves a lot more upgrades. I mean, Romania has a lower CDS level than China, and China is AA-. Romania has a similar CDS level to Slovenia, which is A. It has a better CDS level than Hungary, Italy, many other countries. So this shows that don't be surprised if you see credit rating upgrades. One of the reasons why credit agencies like Romania, or I would say more bond investors, is we have a low debt level. Like debt to GDP level is around 34-35%, which is much lower than Poland, Germany, Hungary, and so on. And over the last years, despite the strong growth or the relatively 3% budget deficit, it has not increased because growth was even stronger than the deficit. Now, when I talk to international investors and I tell them about how fast Romania is growing, they ask me, is this not a bubble? And I say, I don't think so. And why? Here's one of the proofs. On the right-hand side, you see credit growth. Normally, when you have a country growing 4-5%, you normally see credit growth of 10, 20, 30, 40%. We don't see this in Romania. So it is really driven by organic growth, not by artificially increasing credit growth. And also, if you look at the banking sector, it has improved massively over the last years. Like capital ratios are really healthy. The coverage ratios for non-performing loans are very good. The number of non-performing loans has now dropped to around 10% from 20% earlier. So there has been a big cleanup, and this is very important if you look at future GDP growth potential. Banks can increase lending. And also if you look at the overall level of how much private sector debt is there compared to GDP. You see in Romania it's only 30%, which is very low. Like C3 average is like 50%, Turkey is 80%. And you see on the right-hand side, kind of the gray line is Turkey. I mean, Turkey has grown very much over the last years, but you see it has come also with a massive increase in indebtedness. While Romania, which is kind of the dark red line, which is just going down, you can see that despite the strong growth over the last years, that the indebtedness has gone down. So this gives you a lot of upside potential for the future. Now my favorite topic, obviously because I like to talk about the equity market and the potential upgrade of Romania from frontier markets to emerging market. I want to talk first about the dividends. So when I did my analysis in spring last year, 2016, I discovered, maybe a bit by accident, that Romania was paying the highest dividend yield globally, around 8% for 2016, was above Kuwait, which had, I think, 7.5%. So this was obviously driven a bit by one-offs, like Banca Transilvania paid a very high dividend of around 15%. It was a one-off. But when I just looked now, I did the analysis over the last days, what can we expect for 2017? And Ludwig mentioned around 5%. I did a conservative analysis, and I can happily announce that it's going to be around 7%, the yield again, in 2017. That's for one, because Fondul is going to pay a special cash dividend, so they're going to have double-digit dividend yields this year. And then also the government, over the last days, announced that they want the state-owned companies to pay at least 90% of their earnings. So we're going to have Transelectrica, Transgas also paying double-digit figures, and also OMV Petrom, which didn't pay in 2016, is set to pay in 2017. So I think this is really good news for the Romanian equity market and Romanian investors. Okay, sorry. The tax on dividends, sorry, I mixed this up. Okay, but still 7% if you compare it to other countries. It is really, it could be again the highest globally, but I have to check this over the next days. Now talking about my favorite topic, upgrade of Romania from frontier markets to emerging market. Not that we didn't hear enough of it today, but I just want to give my 5 cents on it. In terms of qualitative criteria, yes, as Ludwig mentioned, Romania did a brilliant job. There's no reason why it shouldn't be emerging market. There are just two smaller things which MECI mentions to me, which is kind of more news should be available also in English. And second, there should be more competition between brokers, and there we as Berenberg, now just entering the Romanian market, try to help in that regard. Now I want to concentrate a bit more on the second slide on the quantitative criteria. So we've heard before from Raiffeisen Bank that they said only 1 or 2 companies fulfill the criteria so far. I can happily announce already 3 companies are fulfilling the MECI emerging market criteria by now. I'm in nearly daily contact with MECI. I pay a lot of money to them to get access to the data. So what is behind it? Mainly it is thanks to Fondul, because Fondul sold stakes in Romgas and Petrom. And thanks to this, MECI has increased the free float for those 2 companies, and now Romgas and Petrom next to Banca Transilvania are now fulfilling also the free float criteria, the free float market cap criteria, and also the trading volume, because before the problem was that Petrom didn't trade enough, but I just did the analysis last week, they're also trading now enough. So this is really good news, because officially MECI, which is the core one to watch, which is more important than FTSE and Russell, because a lot more money is following MECI than anyone else, they are looking at those 3 criteria. But we shouldn't rest on putting pressure on EBRD, on the government, on Fondul, on the CIFs to sell more stakes. Yeah? Because the more they sell, the higher the free float market cap is going to get, and the higher the weighting would then also be of Romania once they're going to get upgraded. And I just talked also to Cristiano about BRD, and if you look at BRD, it fulfills the market cap criteria, it fulfills the ATVR criteria, the trading volume criteria. Now, if Fondul and the CIFs would sell down their stake in BRD, then the free float market would also be large enough, and we would have finally 4 companies fulfilling the criteria, which we hear through the graveyards is kind of what MECI wants, that they want. Officially they want 3, but unofficially they want 4. Obviously an IPO from Hydroelectrica would be amazing and would make sure that, that all those criteria are even more easily fulfilled. Now coming to the challenges for Romania, I want to point out here one, which is clearly demographics and immigration. So if you look at the population of Romania, of the development over the last 20, 30 years, it has gone down quite a lot. So around 1990, we still had 23.5 million Romanians in Romania. Now it's below 20 million. And this obviously has an impact also on GDP growth, because GDP grew since 2000 by around 3.5% on average. And then if you look at GDP per capita, it is 1 percentage points more, it's 4.5%. Yeah? So this shows you that it kind of reduces the GDP growth if you have a lot of people leaving the country and having a low birth rate. Now what can be done? I looked at the PISA study and at other factors, and I can see that Estonia, for example, managed to hold the decline in the population. And that's because they managed to get more net migration, or to get a positive net migration and a higher birth rate. I think one of the reasons also in Estonia is that they have a very good education system. So if we look at the PISA ranking, which is comparing how well 15-year-olds perform globally in certain tests like math, reading, and so on, and writing, Estonia was the 3rd best in the world. Yeah? While Romania was kind of a bit below average. So I think if there would be more investments in education, and if GDP growth continues to be so strong that more labor is needed, then I think Romania can manage to reduce the decline or even stop it. Because there were some forecasts from, I think, IMF, they predict that in like 40, 50 years in Romania there might be less than 50 million people living. So that's something obviously which needs to get attention, and I think there's also attention added, and I think the government has introduced some laws to make sure that families are supported and there will be more children born. Now, I think it's, to summarize it overall, I think 5 things need to be done for Romania to make sure that it's going to stay the growth tiger, and maybe also in 10, 15, 20 years we're not going to talk about the upgrade to emerging market but to developed market. But for this to happen, Romania really needs to invest more in infrastructure. I mean, we need to connect Western Romania more with Western Europe. So there need to be highways, motorways, railways, fast speed connections. Secondly, there needs to be more investment in education, because we've seen that there is at the moment huge demand from Western European or US companies to outsource shared services to Eastern Europe. Also, I live in London. With Brexit, there's now a lot of topic that the banks are going to move a lot of their operations to Eastern Europe. But to really profit from that, you need a highly educated population. So any investment in education will be multiplied afterwards. Thirdly, the government needs to make sure that the budget deficit is not going above 3%, because if you go above 3%, then there's a risk that the EU cohesion funds will be frozen, which happened also to Hungary once. And then, fourthly, we need more privatizations. I mean, this needs to continue. I mean, Fondul has already done a good job over the last years, because if you get like a private company or like private management into governmental organization or companies, then you see efficiency gains, you see more growth. Yeah? And this needs to continue. And fifth thing that needs to continue is that Romania needs to have a very good relationship with Europe, so that the Western European companies are continuing to invest in Romania, and not what we're seeing, for example, in Turkey, where the relationship has deteriorated a lot, and you can see it in the numbers in foreign direct investment. It has gone down quite a lot. And I think also after the current 2014-2020 period, there will be still a lot more EU cohesion funds available for Romania. So to keep that available, a good relationship with Europe is highly appreciated. Thank you very much.